Okay, so this is trade review for August 2nd, 2023. We're going to go and start off with the goal, and that is to take trades in my system and not the ones similar to them or not good enough. And notice how I haven't changed this goal. It's been the same one for the past week. It's important to stay focused on this goal until it becomes irrelevant, and I have to focus on another goal. I like to think about it as the 80-20 rule. 80% of the time I'm going to be on my top game, 100% on my A game, and I still leave that 20% for that C game where I will or am bound to do mistakes. It's important to understand that we are shooting to be elite traders and not perfectionists, and understand that perfection is nothing but an illusion. We're going to go ahead and start with the first slide, which is correlation. And we have the strong, we have the weak. CAD +4, Euro +6, Pound +5, USD +6, Australian dollar -6, Swiss franc -4, NZD -5. Okay, so using the numbers, I did put the euro and the odd together. As you can see, euro +6, odd -6, and this brought my attention to this setup. Also, prior to trading session, I like to look at news and put those together, put price action and news together, and create a thesis. So yesterday's news caused a break, and this happened on the daily time frame. As you can see, we're looking at the 15-minute, but this price here was the daily range and it broke out. This news was odd interest rates, and as you can see, we have euro odd here, pound odd here. Odd is on the right for these two, and down here we have odd Canadian dollar and odd Swiss franc. And so keep in mind that in order to get rid of odd, these two must be going up and these two must be going down, because odd is on the left for these two. And so this is correlating. These are the sister pairs, and what I use to solve where that money was going, money was flowing, and whether this was a real move or not. And so we're going to take a look at euro odd, and here we can see the daily high, and it broke right through. Keep in mind that 1 hour legs are nothing but this a bullish candle for the daily, which is, as you can see, the moment that it resolved up above this high, we could start counting legs, which is leg 1, leg 2, and we were trading leg 3. So this whole move here is nothing but a bull candle on the daily, and leg 2 is bigger than leg 1, so that's good. That means there's momentum in this, and we're most likely expecting a leg 3. So let's dissect this. We have a 15-minute pullback. This is what so we're going to take a look at the approach, and we're going to take the store and buyers aspect, which is we have these this uptrend, which indicates there's demand in this. And the moment that buyers stop buying is the moment that the store gives a discount so that it can find buyers once again. And so, as you can see here, this is where buyers stopped buying and seller came in. Sorry, this isn't sellers just yet. Sellers come in here after they know that this is a sell. So buyers stop buying and it breaks structure. Sellers come in and buyers just devour those sellers. And so what happens here is, when we take a look at it as the store and buyer perspective, the store gives a discount here, buyer reacts, store gives another discount, they barely react, and here around these prices where the store knows there's a buyer, it stops giving discounts. But as you can see, all these wicks is the store still trying to find that buyer and testing the waters. And once the buyer realizes that the store is no longer giving a discount, that's where it becomes aggressive and they buy it up. So this is what we call the primary, secondary. This is the trapped area. And so usually we expect the divider. We usually expect the divider to reach the trapped area, but in this case it doesn't have to, because it broke a level and it's reacting off these areas. So keep that in mind. Here we have the 5-minute time frame, and where we can see the details of this pullback, which is store gives discount. Sorry, let's take it back from the top. Store gives a discount, buyers react. Store gives a discount, they react, but they stop buying. Gives a discount again, they react, attempts one more time, and then buyers buy it up and become aggressive. So here we have the primary, secondary home run here. This is the trade where it's here where we have the range, and you could barely tell, you could barely see it, but in on the chart you can clearly see this is somewhat of a range. And here we have a spike, which is the FOMO, and that is people chasing the break of this range. And this is where they start chasing and becoming fearful that they're going to miss out. And as soon as they chase, they bring it back. They stop hunt their stops. People who have a break even and people who put their stops below here. You can clearly see that this is the stop hunt. But as soon as the stop hunt comes in, that doesn't mean we start buying immediately. We have to allow them to try one more time. And here you can see the attempt. This is their last attempt before taking off, and you can see that it reaches the top of the area. Can't quite remember if it made new highs or not, but that's not important. The trade worked out. We weren't shooting for any highs higher than this because of the fact that this is a 15-minute pullback, and I don't really expect much from it. We lower our lot sizes, lower our risk, and we still trade them. Just not a type of trade where I will size up in.